Good morning. I'm Vince Lancy. It's New Year's Eve. Yesterday, the Department of Treasury, the U.S. Treasury, was hacked by Chinese hackers. And the second story we'll be covering is mostly in premium, and that's an update on the retail positioning for gold, silver, and copper headed into the new year. That cohort could be a catalyst for any initial directional bias that the market has going into the new year. So the title is Janet Yellen a hack? Yes. Is Janet Yellen a hacker? No, but didn't stop us from implying that. Okay, here we go. Starting with the markets. Here's the first page. You can enjoy a lovely picture. 10-year yields are 452 down 1. The dollar is 108.17 up 9. The S&P 500 is 59.22 up 19. The VIX is 1693 down 48. Gold is 26.11 up 5. Silver is 28.88 down 5 almost. Copper is 4.0 down 5. That's over a percentage point. WTI is 71.30 down 10. I think it was a little stronger before. Natural gas is 384 giving back some, down 3% after being up, I think, 20% yesterday, at least 13 cents. Bitcoin 94 spot 400. Wild intraday ride yesterday, up 1700. Ethereum 33.92. Palladium 900, up 2 and change. Platinum 902, up 1 and change. Gold, silver now above 90. Silver, again, they're selling more silver when stocks are weak. It's going to happen. And grains are all up anywhere between 20 basis points and a percentage point. Okay, front page. Chinese hackers breach U.S. Treasury. Free to all. That actually is a legitimate coverage of what happened yesterday. Humorous picture aside. Quick note, China's playing the U.S. dollar and gold. We're going to be building out on that next year, next week, after I do a little bit more reading. And silver another step higher in 2025. We're happy to report that after we put this up on the 29th or 28th, banks have not banks, other news agencies have been putting out their own versions of it with far inferior content. Let's put it that way. Uh, Not even a chart, you know? All right, so moving on. Chinese hackers breach U.S. Treasury. The U.S. Treasury Department disclosed a significant cybersecurity breach attributed to a Chinese state-sponsored actor. The intrusion, described as a, quote, major cybersecurity incident, involved a third-party software service provider, Beyond Trust. Nice name, right? Incorporated, according to a letter sent to Congress and reviewed by Bloomberg News. Now, we have the full story there, written by us originally, covered after researching the Bloomberg News, and et cetera, et cetera. But at the bottom, we have more lovely, fictitious artist renderings of Janet Yellen in short hair, long hair, uh, at a state dinner with her boss, Xi Jinping, and dancing with him. Anyway, those are special for premium at the bottom. I think all in all, about 15 pictures. So there might be something in there that you can giggle at. All right, next. It's actually a significant story. On the other hand, it's also nicely timed. Uh, it's just nicely timed. Main story, retail gold, silver, and copper positioning says we're not there yet. That's our headline. Bank of America notes CTAs are ending 2025 stretched long the US dollar, short bonds, and they are somewhat long US large cap equities. There are stretched long US dollar positions followed by bond shorts. Equity longs in the US remain intact, but are not stretched entering 2025 as equity vol is elevated and as well equity price trend is not fully long. There is almost no commentary from Bank of America on commodities, and that makes sense because there's really little positioning to speak of as a potential catalyst for a move right now. But there is trend in the positioning towards a catalyst. So it's not like they're just sitting on their hands. They're putting trades on. Now, it's important to note that, as the end of the year comes, people will say, well, people close their books down. CTAs generally are in and out. They don't really stop because it's futures. So if you're trading futures, your P&L is what it is on the last day of the year. And they get in and out of positions all the time. They just so happen to not be exposed to precious metals very much. They have reasonable, but nothing big in energy. They have, um, I'd say, very big positions in treasuries, which may or may not move the market. They are lopsided long in currencies in the dollar, specifically, I think, against the Canadian dollar right now. And they are um, somewhat long in stocks. So this chart here you're looking at, we have a whole package for you to look at, but we're going to go through two charts for you here now. And in the premium section at the bottom, we'll stay on the video and we'll go through how we read these and give you a little bit more insight into the implications. All right, so precious metals before November 27th, 2024, there was 14 billion in longs, and now there are 10 billion. So again, disinvestment in precious metals net. That's a reflection of, let's say, gold and silver, platinum and palladium. They're long gold, but they're actually now short silver. Not as short as we'd like them to be, but they are short silver. In energy, they've pared their shorts from down 26 billion to down 17 billion. That's not to say they're reducing shorts across the board. See, they're really still short oil. They've just gotten long natural gas. So there's a seasonality play here going on, weather season, I should say. And the CTAs are now getting long natural gas and they're making money, right? And then my guess is they're going to be long heating oil, though I haven't seen it yet. Base metals have flipped, not flipped, uh, gone from minus 11 billion short to minus 18 billion short. That's good for precious metals. We'll come to that in a second. Livestock, I don't really have any insight to give you there. Grains, uh, grains have been very big in their flows, largely because wheat is now a geopolitical crop. And if it's more geopolitical, then that will affect plantings of other commodities. Soybeans are geopolitical as well. Let's be fair about that. All right, next chart. All right, so here's three charts here. I'm going to touch on what they mean right now and then get into more detail on premium. Gold is well balanced, slightly long. If the market drops, the longs will puke. If the market rallies, the momentum FOMO types will add. We are approaching a market that's almost underbought for gold. Well, it is underbought, but more significantly underbought. Copper. This is your copper positioning when you're looking at a market that's being traded by people that are worried about the economy. Some of these are CTAs in America selling it against potential Fed rate cut backing off. Some of these are hedging their stock positioning in general, almost like selling copper, like buying a put. And some of these are traders looking at Asia, specifically China, and saying, they're not doing enough. I'm going to keep getting short copper. Now, all these reasons I'm giving you are after the fact reasons for some of these guys. Some of these guys are just momentum oriented. But as momentum and statistical and algorithmic as they claim to be, the reasons that I'm giving you are the reasons they even think that way. Silver. You'll notice silver looks more like copper than it does gold graphically. Well, that's because silver is being shorted like it's an industrial metal. Now, we'll get into what the lines mean specifically, but I'll just say this. If you're looking at copper compared to silver, which is what I'm doing right now, the difference is The red line, I want you to notice first. The red line in copper is flat. That means if the market drops, there isn't much more money that they have allocated to sell it. On the other hand, if silver were to drop, there is more money, not a lot more money, but more than copper. You can see how much selling will come into gold. So the point is that they're pretty much done selling copper now, and now they're selling more silver, which eventually means in a rally, both of these metals will rip. And that's what you're looking for here. So, pursuant to the title, are we there yet? No, we're not. All right. More at the bottom. News and analysis: Chinese hackers breach U.S. Treasury. Let's click on that so you can see the full story. It's a full legitimate story, humorous picture aside. And there you go. The agreement on gold, that's the comment that I've been making about China and the U.S. Hartnett's bear scenario updated. I want to revisit this because it's kind of playing out, not fully, but kind of playing out. When stocks are weak, as they were yesterday, and bonds are strong, as they were yesterday, and haven't been strong for a while, that's a sign that some longs are exiting for whatever reason. Anxiety about Trump trade ending, anxiety about Fed not easing, just wanting to book profits for the end of the year. There are all kinds of different reasons converging on the same behavior. Well, when they do that, some of those people will take their money and put it into cash. Some of them will take their money and put it into bonds, right? So you'll see the bond market percolate higher. So the yields will come in, and that will also be consistent with a market that's scared of recession. Uh, and then if that continues, the dollar will strengthen usually. If that continues, you'll start to see the dollar roll over and drop. Now, continues during the day, perhaps. Continues during the week, perhaps. Continues over a month-long period, yes. So those are signs that you don't want to buy a dip. If you don't see the dollar being very strong and you actually see bonds getting stronger as stocks are dropping, that's usually a sign to not buy a dip in this environment. Now, that could all change, but that's the behavior that we're looking at. Founders AM, Happy New Year. That's from yesterday. Goldfix Sunday reading, plenty to read in there. We did that already. Equity recap: U.S. equities retreated on Monday, but the S&P 500 and NASDAQ comp ended the year up 23.8% and 29.1% respectively. Large caps lagged small caps, S&P 500, et cetera, et cetera. Market news. There's the story as covered by us. There was a tragic accident yesterday. Accident investigators are trying to figure out what caused a Jeju Air flight to belly land without its landing gear down at Muan International Airport in southwestern South Korea, killing all but two of the 181 people on board as it burst into flames in the nation's worst air disaster in decades. Now, the plane that they flew on, Boeing has rightfully been getting a lot of criticism for their safety problems, but the type of plane used on the flight is a mainstay, and it's one of the most commonly used airplanes with a strong safety record. So it's not necessarily a Boeing problem, but it's certainly not helping their situation. Here's natural gas futures. You may as well, we've talked about this, I may as well give you the official CNBC story on it. Natural gas futures prices surged Monday, hitting a new 52-week high, following reports of a colder than usual temperature outlook for January. Natural gas futures, February futures rose 15% during the session after an updated outlook by the weather company, and the atmospheric G2 released Sunday showed that the temperature forecast for next month is expected to be colder than average in the east, specifically from Florida to Maine, as well as certain parts of the Great Lakes. Okay, give you a little breakdown on that. First, as an observation, I think there's people that are thinking about what happened in Texas a couple of years ago when they had a freeze down there. And so that's spooking some people into it. You have a lot of people that are short oil, and so they're probably buying natural gas against it. They may buy heating oil against it. And also, we do have a legitimate cold front that's coming in. So we're getting some good old-fashioned winter weather coming in. Now, as far as trading, if you're saying, oh, I should buy natural gas, well, you can if you want. I'm not going to stop you. But keep this in mind, more than almost any other commodity in the world, now grains may be more like this on times, but more than any other commodity in the world, when natural gas spikes because of weather, the spot market will spike. The futures will trail, but the spot market spike is usually short-lived. So do not if you want to buy natural gas to buy it, go ahead, buy it, right? But if you look at spot and say, oh, spot went up 35%, but futures only went up 15%, that's right. You may look at that and say, oh, futures are undervalued relative to spot. They should catch up a little bit. That's a hazardous way of thinking as someone who's lived it. Natural gas spikes, while they can be huge, don't really translate into futures that much because natural gas is a heavily consumed commodity. You use it or you lose it. It's very much a spot market with a futures market attached to it. Think of it more like electricity or power. And a hat tip to Bryn Kelly for that insight. I appreciate that. Investors plowed more than 1 trillion into U.S.-based exchange-traded funds in 2024, shattering previous records set 3 years ago, and raising Wall Street hopes for even bigger year ahead. That's like an alarm bell for me. So down 25% might happen. All right, data on deck. Case-Shiller Home Price Index, actually pretty important. There are people out there gambling who may want to take their positions off when this news comes out. All right, so happy New Year to everyone. I will see you next year, and stay with us in premium for a little bit more detail on the CTA retail side, as well as a quick peek at the pictures. But before we do that, let's look at the chart. All right, I want to so let's go with gold. There's really, look, the market's nowhere, right? So uh, I think the most important takeaway, and I don't have it up here, but let me pull it up for you to see. Every Sunday, we have a discussion that the founders are invited to, and we go through various topics. Commitment of traders is usually a mainstay, but other topics are involved. And this weekend, the one which just passed, uh, I think this might be the most important chart to look at if you're looking at gold right now and you're trying to figure, should I sit on my hands? Should I do something? We had a very lengthy discussion on that, and that's in this post. But the video is made available for everyone. But this chart here, again, I've touched on this before. Randall Blava puts this together for us. The gold line is the price of gold, and the blue-red combo line, that's open interest. So here we are. Open interest is pretty much, this is a chart going back to, December, November of 21. Okay. Here's where open interest generally bottoms in a normal market, meaning in a market that doesn't have an election going on. Bottom, bottom, bottom. Can I draw lines here? Yeah, I can. Bottom, 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 right? Right? And this is our run up. This is everyone getting in. Now the market is getting back to normal. So in open interest terms, that's us now. Okay. However, now we move to the market. The market bottomed here. The market bottomed here. The market bottomed here. 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 These three little bottoms we don't care about. Right. And now here we are, and the market is here. Right? What does that tell you? All the hot money as governed by the open interest being all the way down here again, right? is out, but the price is still up. And that's an extremely beautiful thing. So enjoy your family, enjoy the new year, wait for the CTA lemmings to get oversold, and then get long. Or do like me and maybe get a little bit short going into the new year. I don't have anything on right now other than a butterfly. And then wait for the idiots to sell it even more, and then you buy it. Anyway, all right, that's that's what I wanted to show you on the gold market. Oh, look at that. All those pretty pictures are still there. Silver. I want you to fully expect silver to have attract more selling if stocks sell off. And then I want you to ask yourself, if the price gets to $26, I'm not saying it's going there, will you buy more? Because if I get an opportunity to do that, I will add physical between 26 and $27. Why? Because that's a stretch too low to the 200-day moving average. Okay? Number one. Number two, UBS is telling clients that between 26 and 28, they're going to recommend that they get long silver. Now, they're going to get long by selling puts, which is not something I recommend to you, uh, unless you like to sling guns. But that's where I am. So I'm going to find something else to look at. Thankfully, natural gas will keep me busy. All right, so stay with me now and we'll go into the premium section. Happy New Year, everyone. Happy and healthy. All right, folks, doesn't have to be that intense or that complicated. I pretty much told you what you need to know about this. Here's the bottom line, right? Okay. Uh, the steeper lines always move away from the position. This is the pukage chart, right? They puke lower, they puke higher, they puke higher, right? So silver is short. Silver looks like copper, behaves like copper, but if gold rallies, silver will get sold initially, but then it'll eventually rally. Next, this chart. There's a lot